And so there's going to be a point where he's going to cause more catastrophic impacts. And the question is he ready to deal with that? And I don't know, man. I don't trust the Fed here. I think they're totally out of their comfort zone.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin.
What is your take on Yellen saying that it's a calamity unless they raise the debt ceiling? It sounds like a repeat of history. What's your take on what's going on? I think she said something about like not enough cash to cover Social Security and Medicare payments that are due. What's your take on that situation and what impact it may have on the markets?
Yeah, so I mean, I think the first thing is that as the Secretary Treasurer, whatever she is, she's gonna make it sound like it's like the end of the world, right? She has to instill fear so that people put pressure on the politicians to get some sort of deal done. Now, historically, this really hasn't been a big deal because on the, at the 11th hour, they passed some deal because no politician wants to be looked at as the responsible party for having the U.S. default. However, of all the times, this is probably the one I'm a little bit more nervous on because you actually have politicians in there that don't seem to give a crap. They just want to make their statement. And I think that's a little bit new. It seems like every cycle for politicians, we get some new kind of people involved where whether they're on the Republican side or the Democrat side, they definitely are like, listen, this is the way it's going to be. I'm not going to budge on my side and screw everything, right? And so I think this time you want to be a little bit more careful. For me, the way I'm looking to trade it, for instance, would be to kind of towards mid-month, and she talked about June 1st. So mid-month, if the VIX is still low, I'm going to accumulate a little VIX because that's the volatility maker. I think you'll see investors start to buy protection by buying the VIX in the second half of the month if no deal is done. So I think as long as it's low and it hasn't rallied up significantly, that would be a nice, interesting trade going into potential worry in the markets. It is kind of a joke, right? I mean, to have this debt ceiling that has to be budged every X amount of months or years, but then you always raise it anyways, and it doesn't really end up mattering. So I agree with you. I think it's more like if you're going to ask foreign countries to finance us, just like, if I'm running my household and I'm like spending money left and right, not paying off my bills, the bank's probably not going to give me a loan. So I think there's something to that where as long as they say, okay, we can only spend X amount before the next time we have to vote on it, maybe it coerces these foreign governments to give us more money. It's ridiculous, though. At this point, it is absolutely ludicrous.
What's your take on it? The likely outcome of this situation? Do you think we get a can kick and just a temporary raise of the debt ceiling, or do you think we get something more permanent?
I think a can kick. I think that's the only way that the Republicans are going to be strong on this one. They really want to see spending cut. You mentioned before the Social Security Medicare side where the government may not be able to pay people Social Security. That pisses me off even more, right? And the reason that pisses me off even more is that people paid that money in. That's actually their money, right? If you're getting Social Security, you paid your entire career into Social Security. So it's one thing to say, okay, well, we don't have enough money to pay this or that, but freaking give people their money back, right? I mean, so I don't know. You get me off on these tangents and then I start losing my mind, which by the way is just one more reason why there's long-term viability for Bitcoin, right? I mean, for cryptos in general. I mean, again, not necessarily the cryptos that can continue to expand exponentially that don't have the non-fiat aspect to them, but I mean, shit, if we look at what happened with the banking crises recently and how that just proved to us why we need Bitcoin. Well, guess what? Here's another example. I mean, you got a government that inevitably will raise, and then they owe X amount to Social Security, which is they owe us our money. They're going to have to print that at some point. I mean, there's just endless printing that will go on. But I think investors also need to recognize that that's a long-term issue. It's not something that I'm not going to buy Bitcoin today because all of a sudden
exactly that's
right?
How I feel.
So,
what's your take on which direction and which metrics they're looking at this week as far as being more important?
Yeah, so I think CPI and PPI will be hugely watched by the market as an indicator for the Fed. The only thing I would say is it's interesting because I do think that the Fed is probably now on pause. They're not going to cut rates, but I do think they'll probably not hike the next meeting, which I think is about in a month and change, before there's a 2-month period where there's no meeting. So I do think that regardless of what the numbers show, I would be very shocked if the Fed was to hike again, considering the stress on the banking system. Like you said, we'll cover that in just a little bit. But those numbers will be cued off of. So whatever we see the CPI and PPI numbers come out, you're going to see the dollar make a move. You're going to see interest rates make a move. And then what we know is crypto, as well as stocks and commodities, will trade off of that, whether it's gold, whether it's silver, whether it's stocks in general. That's going to be a driver for this week. So it definitely is. And by the way, you can see today where, at least in the equity markets, things are very quiet. We had Apple, we had the non-farm payrolls last week, we had the Fed. Now we have this little kind of period, what I call a hangover, where everyone got too drunk on that kind of stuff. Now they're like feeling it until Wednesday when they get the PPI numbers. The only thing that kind of made me think that they were going to pause is, number one, Jerome Powell kind of alluded to that, and he doesn't like to surprise the market. So if you look at the Fed funds futures and what they're pricing in, they are pricing in pretty heavily a pause next month. So that leads me to believe that the Fed won't want to surprise things unless the economic data gets really out of control. The other thing to keep in mind with the non-farm payrolls on Friday, the Federal Reserve had those numbers, or at least the approximate numbers, on Wednesday when they made that decision, and he gave those commentary. They always get the numbers a little bit ahead of everyone else. So I do think, taking that into account, he probably was aware. And I also think that if you look at some of the underlying factors in the non-farm payrolls, there were some signs that there were some weakening trends, not in the headline numbers yet, but there were a few little signals. So, the other question too is the Fed has to be aware. I mean, this is what drove me nuts about that. I mean, Jerome Powell stood in front of everyone and said, hey, the banking system's stronger. It's doing fine.
I was going to get to that.
And then the banks collapsed, literally 50% down for Pac West and some of these other ones. And so the Fed has to be acutely aware that every time they raise 25 basis points here on out, you're basically putting another knife in the back of the regional banks. And so there's going to be a point where he's going to cause more catastrophic impacts. And the question is he ready to deal with that? And I don't know, man. I don't trust the Fed here. I think they're totally out of their comfort zone. So I think there are some banks, right? I think the bigger banks are stabilizing. Like USB is kind of right behind the JP Morgans, the Morgan Stanleys in terms of its size, even though it's a regional bank. And I think that for those banks, the fact that the Fed is basically, any bank that's failed, they've said we're going to pay out. The FDIC has said they'll pay out all deposits, right? So I do think that takes a little fear. Like, I'm not worried about losing anything over $250 in any account that I have at a bank, because again, it's very clear that the government will cover that. So I think that does take it down a notch. My biggest question is, like, how much are these becoming zombie banks, right? Because you not only have what's going on with consumers.
Now zombie, are you talking about the national banks or more regional and local banks that being
right
zombies?
Now regional, but I do think it can spread, right? And the key is you have all this kind of flight to higher interest rates that we're seeing, leaders inching out, but then also there's this, what the Fed is not talking about, but if you look under the kind of the hood of the markets are starting to pay attention, is the commercial loan defaults that are starting. And this is going to be a whole nother wave that probably hits in the second half of the year, maybe the fourth quarter. And that's now going to have a huge, so all these banks have all these massive, they have these bond portfolios that are paying 1% when everyone else is rushing to get 4 or 5% on them. And that again is a huge loss on their balance sheet. They don't have to mark to market that, by the way. So they're carrying these massive losses, which is why no big bank like JP Morgan, remember, JP Morgan could have bought out the bank that failed, FRB, I think it was, but instead they let the FDIC take it over, and then they bought it at auction. And the reason why they're doing that is because as soon as the bank,
auction.
What's that?
Quote unquote auction.
Right.
It was a rigged.
I mean, and by the way, the deal was amazing. Like, if I could have gotten that deal, I'd be a billionaire right now. Just put it
exactly.
It was incredible. But the key is, they don't have to mark to market unless they get bought out. And so all these banks are carrying these billions and billions of losses, and it's not even taking into account the commercial real estate defaults that are coming now. So that's what I mean by zombie banks. Is, are they just going to be like, this bank is negative $100 billion, but because they don't have to mark to market, they can still operate? I don't know.
Yeah. What's your take on maybe the next 3 months with Bitcoin?
Yeah, so I don't know if you could pop up my chart there. So basically, I talked about this for months in advance about the 30,500 level. And again, psychologically, that is like the major point of contention here. It was a level where, for me, it was a pivot point whether or not the low was in or not. And so far, we haven't broken through it. So the low, to me, is potentially still not in crypto. The level, why psychologically it's so important, it was the beginning of this mega move up to 65,000. It was the dip lows, and then the move up to 69, and then we came in and consolidated before breaking down. So essentially, we've just reversed that move. If we zoom into the current price action, you do have some bearish stuff going on here, right? Number one, you still can't take out 30,500. You have a level here at 27, which I'm watching closely, but you could also make a case that there's a pretty clear trend line. I mean, maybe even going back to here, where we can just kind of slide that up underneath.
There you go.
And that's another concerning thing. So right now we haven't broken it, so you got to give it credit for not breaking it yet. But if this takes out to the downside, then that's where trouble really gets started. And yeah, I mean, to me, to see so many bulls out there, I don't know if you're saying that there's potentially new lows to be seen in Bitcoin as well. But again, I would say you and I are probably one of the only people out there. I think there might be one or two else out there talking about that. It's certainly not the common perception. But to me, this is a bear market rally. And look at 2018-19. You had rallies that were percentage-wise bigger than what we've seen here, and we still came down and made new lows, or at least touched the same lows out there. So I do hope people are careful. I think the government on purpose is not unveiling regulation because they want to unveil their stable coin, their CBDC. What concerns me and what I think a black swan could be is if the government unveils the stable coin, the CBDC, where does Tether fall in the mix there? What's the purpose of Tether if we already have something that the government has that's pegged to the US dollar anyways? And so then, I mean, I don't know. If all of a sudden Tether's not as useful, does it then create more instability? I'm not sure, but I do think investors need to be very careful.